Hello, everybody. Thanks to Norman and Emily for setting up this beautiful event. For us, it's an honor to talk, I guess, about the category within crypto that is experiencing like the biggest growth, currently at least. We're going to talk about stablecoins, and what we try to achieve with this panel is really going to the growth drivers for the next leg of stablecoin adoption. We're going to talk about infrastructure and the question of who benefits most from this boom. But before we dive into the questions, I'd like my panelists to quickly introduce themselves.
Hi, I'm Felix, partner at Greenfield Capital. We are a crypto fund investing across DeFi, consumer, and infrastructure.
Thanks.
I'm Carlos from Squads. Squads, we build products and APIs to kind of unlock the benefits of modern money. Most notably, we built the smart account standard on Solana that has over $10 billion in TVL across, I think we have like 1% of all stablecoins, of all USDC in our protocol. And now we're building kind of open finance APIs to kind of unlock what we realized we could do with the stablecoin stack to other teams that are building in different niches.
Yeah, well, thanks so much for having me. My name is Anke Liu. I lead our ecosystem growth team at the Stellar Development Foundation, which is a nonprofit founded in 2014 to lead the development and growth of the Stellar network. And for those who are unfamiliar, Stellar is an open source layer 1 blockchain network that's designed for everyday financial services. And I'm happy to dive into some of the use cases later this session.
Perfect. So we have venture capital, we have the app and protocol layer, and we have the layer 1 network here on stage. What I'd like to start first is to have a look into the crystal ball, because currently, and this is all about growth, as we said, we're standing at a circulating supply of stablecoins of roughly around 250 billion in US dollars. And I would really love to get your take, like your brief estimation on 18 months from now, by the end of next year. Where do you expect this number to sit? Who wants to go first?
I can go first. In the last few months, so since the beginning of the Trump presidency, it's been insane. We saw probably around $200-300 million in only stablecoins flow into our protocol. That for the longest time, I mean, we were sitting at like $600 million in stablecoins in our protocol, and it just bumped up like crazy. And at the same time, stablecoin transfers are at an all-time high over and over and over again. So I don't want to predict necessarily where we'll be, but it's becoming very clear that we've crossed the chasm. And now these early adopters are really sort of running with the flag towards and showing everybody like what is possible. The infrastructure definitely is where it's supposed to be. And now it's just a communication problem, a distribution problem, a trust problem. But it's extremely exciting to see, and it very much so is unlike anything we've seen so far in kind of crypto as an industry.
Okay, any estimation from your side?
Sure, yeah. Well, if you look at it, I think like we started about like 204 billion earlier kind of this year. So like we've already gone through some significant exponential growth just in the past 6 months. And so, some of the key growth drivers that we see are institutional adoption. So not only TradFi companies, but also the likes of like X, Meta, Airbnb, even like in talks with crypto firms on incorporating stablecoin payments. And then the second one would be regulatory clarity. And so like some of the things are like the US Senate is advancing the Genie's Act and creating a federal framework for dollar-backed stablecoins. And then thirdly, I think it's the real world use cases, and specifically those are the ones that we look at Stellar. And we see a recent Artemis report actually mentioned 36 billion in annual run rate of B2B payments, of which 13 billion of those are from card-linked stablecoin payments. And so when you look at actually those numbers and kind of like the recent interest, and then with institutional adoption and also the favorable crypto markets, we see a strong momentum. So if I had to take maybe a good guess, reasonable guess, I would say about 500 billion to like 1 trillion market cap.
Okay, that's quite bullish. As a venture capitalist, you're always like forward looking. And we, like Anke already mentioned, a couple of drivers that could influence the growth of stablecoins from here on. Where do you see like the biggest traction now when it comes to like builders entering the stablecoin market? Is it also like more tailoring towards the institutions, or is it still like more on the crypto native DeFi side?
So we generally look more on the crypto native DeFi side, since that's has been our bread and butter, funding the kind of more decentralized side of things like infrastructure, DeFi primitives. So we have seen new launches in crypto native stable coins, like super decentralized ones. For example, Liquidity V2 has relaunched. They have an interesting growth strategy, basically having a business license to have forks that deploy on other chains, negotiate deals with them to basically allocate a certain allocation of their governance tokens to stakeholders and token holders of the initial liquidity protocols. I think that's an interesting case study, and I do think they will see significant growth. But I expect even more growth actually if the Genius Act is actually enacted, that a couple of banks will launch institutional stable coins, and we will see significant growth there, probably on the B2B side. So we're less active on that side. I think that's more kind of where the incumbents play. But we also see like we also look at the payment side, like where like I guess remittances and stuff like that. But we get into that maybe later also. Yeah. So and I would say like okay, we had seen like a compound annual growth rate over the last 2 years of like 40%. I could imagine that accelerates even further. So I'd also say like maybe 500 billion, 600 billion, something like that is realistic. Maybe $1 trillion, let's see, but yeah.
Okay. That's quite in line with like I think on a more like even more like future outlook from Citi and all these other like financial institutions with their estimations. When we look back until now and look at stablecoin adoption, I think there were like 3 main drivers so far. Like the biggest one was certainly like just trading in DeFi using stablecoins as collateral. I think the second one arguably was like emerging countries and people there looking to get like exposure to the US dollar for their like volatile currencies. And then the third one was more like DeFi native yield products like the Athenas of the world or like the Mako or Sky products that really absorbed like demand for stablecoins so far. Now I mentioned, or I heard from you guys that you're also quite like optimistic on institutions adopting stablecoins, which I guess would be more about cross-border payments or like treasury management for their clients. What do you think now really about this question of the next 100 billion in like stablecoin demand? Is this more coming from like the maturity of crypto native players gaining more adoption, or is it really these institutions that just enter the space and issue their own stablecoins and drive like more kind of a B2B nature of stablecoins? Where's this?
I already kind of hinted towards that. I do think in this next phase we will see actually a transition towards more B2B adoption, institutional adoption, while I also expect growth on the crypto native side, that's for sure, like with kind of new yield-bearing primitives coming up and copycat stuff like the Athenas and so on. So I think both will see significant growth, but I think we are finally entering a stage where actually we will see real corporate adoption and B2B payments and treasury management.
Carlos, or Anke, you wanted to go?
Yeah, I mean, I'll add on to that. I mean, I think like when you mentioned a few use cases, right? I mean, specifically like cross-border payments, like micropayments, like those are really interesting, but they also like require like millions of transactions to actually create proper volume. And so if you're looking for, well, you know, how are we growing the next like $100 billion stablecoin flow? I mean, would be I would say treasury management. Like the ticket sizes are just orders of magnitudes larger. Than some of these other use cases. And so some of these other use cases might require like millions of transactions to actually lead to that volume, whereas like, treasury management, like institutions and corporations just need to make about like 100 of institutional decisions to get to like massive capital blocks. So like, for instance, like B2B payments, like you mentioned, they're exploding. Shopify kind of announcing stablecoin kind of integration and payments last week. And so when we look at kind of those companies that are now entering the space, like a single Fortune 500 company could easily, like when they adopt stablecoins, they could, like for cash management, they could easily deploy $1 to $10 billion each. So I think if you're talking about the fastest way to get there, I think it would be that institutional like treasury management.
Yeah, to add to this, I also agree, but the reason is quite subtle actually, because a lot of these institutions already have all the licenses required to move money within, their own branches, cross borders and stuff like that, or B2B money management. But when you look at consumer, the licenses required are a lot harder to acquire, to get, and they have a lot more regulatory oversight, which these companies don't necessarily want to bring upon themselves, right? The type of sort of regulation that a bank has is detrimental to their growth, and that's why we have fintechs, right? Because fintechs are this layer on top of banks. They're not quite as regulated, and that's why they can go to consumer, right? And so when we look at for example, what Stripe did recently by acquiring Privy, that is a play towards self-custody, which means that they are betting on their next leg of growth to not only be where they already have all the licenses, but they're also looking at gaining advantage through that regulatory arbitrage of going self-custodial. And who within their sort of customer base needs kind of self-custody for them to provide the services to? Well, consumers. So actually, most likely, we'll see a lot of different self-custodial consumer plays playing into that regulatory arbitrage.
And how do you think about geographic distribution of adoption? Is it like equally like distributed across different continents, or is it more driven, as we've seen it so far, from like emerging countries, from Latin America, from Africa, maybe some parts of Asia? Because you could also make the case that if it comes to consumers, there isn't really much of a problem to be solved in the US or Europe, and you could somehow discount that into your projections on how does stablecoin evolution go on from here?
I think that is the main question on everybody's mind. Like, we saw Ramp announce that they're going to do self-custodial cards in order to provide their services to businesses around the world. Right now, they're US only, and they've been growing enormously in the last few years. And I know that they're betting on Latin America as a first market, right? I think everybody knows that Brazil and Argentina have seen enormous growth in stablecoins. But whether the volumes are there or the profit margins are there for them to meaningfully kind of adopt it, I don't know. I think something interesting with companies like Stripe and Shopify moving to stablecoin payments is that if they actually manage to convince or incentivize consumers to not ever off-ramp those funds, they're saving so much money that they can offer incentives to pay with stablecoins, right? And so all of a sudden they're cutting out the card payment processors, or the card networks, which traditionally are the biggest cost for a company like Stripe, right? Because they have to pay interchange fees and whatnot. And so I think that from an incentive standpoint, there could be a play towards the developed world, just out of if you look at kind of the amount of interest in a buy now, pay later, this is not necessarily only happening in the sort of global south or anything like that, right? It's happening in developing countries as well. And so I think that there's a lot to be done in both sides of the planet.
Is this reflected also in your activities when it comes to your go-to-market and attracting new developers for the Stellar ecosystem?
Yeah, I was just going to add to that because, I mean, specifically, Stellar focuses on emerging markets, and especially when we look at stablecoin adoption, we see the most, just adoption even of, innovative technologies, so that we have recently launched DeFi on Stellar, and, Latin America and Sub-Saharan Africa are the quickest to actually adopt that, from a startup level as well as from a user level. And so, because the reason that, because with crypto and with blockchain and with self-custody models, like startups and businesses can actually design products that are a lot more cost effective, that are a lot more that offer a lot more at faster transaction speeds, that cut out the middleman, right? And specifically, if you then combine that with some of the like on and off ramp kind of provider network that Stellar offers, such as one of the largest cash on and off ramp providers networks across Web3 using MoneyGram, then suddenly you open up like stablecoin payments and financial services to a whole set of like peoples that like let's say only use cash or only use mobile monies, and now you're able to actually connect that use case end to end, where they can not only maybe save in a stable currency, but even like earn a percentage of yield in, like, let's say a DeFi protocol. And so we have a number of apps on Stellar where we see that like steady like on-chain kind of like activity and growth, regardless of market activity, because these products, they're solving a real need for these users. And so one of them actually, it was so cool because we were talking in the prep call, because like we have several apps that can offer this service, but particularly one that I wanted to call out here is Decaf. And so like actually like people like specifically they focus on Latin America. People can bring their cash to like a physical MoneyGram location and actually cash in, and then they get a USDC balance. And in some other wallets, they can actually deploy that capital into a DeFi protocol, but also in your case can maybe you can talk a bit about that, because it was really cool to hear.
Something that we've seen, especially in the last few years, in terms of like problems that stablecoins are solving, is that the most common corridors of moving money between, for example, the U.S. and Mexico, or the U.S. and Kenya, or something like that, are very much a solved problem. But then when you look at less common corridors, the last mile still kind of poses a problem. And so I was trying to send money back home to my dad in Colombia, and there's multiple problems with using the traditional banking system. One, I would lose almost like 7%, and it would take a week if I sent it through traditional banking. And so I was looking at solutions to do it in crypto. I tried Bitcoin and having my dad off-ramp with local Bitcoins in some shady back room in Colombia, and that wasn't necessarily the best way. So Decaf is a really cool app that has Solana integration, because I hold my funds on Solana, and then I send it to my dad to a Solana address. In app, he can swap to Stellar, and then all of a sudden, through their MoneyGram integration, the money lands in his bank account. And so, because they solved that last mile in Colombia, using stablecoins throughout all of a sudden solve this really big problem that I think that is going to prove out that certain corridors have more volume than we think, and potentially more of these kind of last mile sort of money movement are going to start getting solved pretty efficiently.
I wanted to circle back on what you also said in your beginning, that on the infrastructure side, it pretty much seems like there isn't much to be solved anymore. Like the core primitives or the core building blocks are there. Now from the venture capital side, if you look at stablecoins and you look also like at the history of like stablecoin developments, I think we were like these new kinds of infrastructure building blocks that we now call orchestration layers, or like on and off ramping for stablecoin first fintechs and so on. What are you are currently most excited about when you look at from the Greenfield lens at the stablecoin sector?
So yeah, I think like if we talk about infrastructure, like I mean chains like Solana and Stellar have seen significant traction, but I think large institutions are still deploying to the greatest extent on Ethereum. And so one of the areas we have been dedicating ourselves is kind of fixing Ethereum, reducing the time to confirmation on layer 1. We recently did an investment there to have not 12-second confirmation times, but only 1 second basically, so that the L1 can keep up with the L2s. I think, and still another area that we are exploring is solving the problem of fragmentation across L2s on Ethereum. Compliance is KYC AML compliance is still something that is a challenge. So we actually back the company there, but I mean they're still in the early stages. besides that, I think like on the payment side, for example, like fraud prevention, or like, I guess a lot of people are highlighting the great benefit of crypto, that you don't have chargebacks. But if you do a wrong transaction, or you're getting defrauded by someone, like signing some fraudulent transaction for whatever reason, there's no way to get that back. So having co-signers and systems that automatically check for fraudulent transactions, to some extent, I guess, AI-based, with some human oversight layer, I think that's also another opportunity. Yeah, I mean, there's still a lot of stuff, but like those are probably the most interesting ones. And besides like DeFi native primitives, where you use stablecoins for yield generation trading, and solutions where you reduce the value leakage for certain stakeholders in the kind of on-chain ecosystem.
And Carlos, on the use case and infrastructure side, are there any like novel use cases that you see from companies, from builders building on top of your protocol, that they are using it for something that like before in traditional finance that was not possible?
Yeah, so of course, like in terms of growth, we see a lot of teams kind of coming to our infrastructure to try to gain that regulatory arbitrage advantage. So being able to move faster to new markets through creating self-custodial experiences is something that we see a lot. And now with the programmability of smart accounts, not necessarily only our smart accounts on Solana, but also in Ethereum, they're becoming more and more used and adopted. Now we're seeing things like teams come to us saying like, we want to deploy 1 million accounts and we want people to have an incentive to use them. So we want to have $5 in that account when they get it. And so traditionally that would be a $5 million ad spend, right? But what they can do with a programmable setup is they can have the funds there, but if the customer doesn't use them in the first 30 days, they can claw back those funds. And so that can still be done in a self-custodial way, setting a spending limit where the company can withdraw $5 as a one-time fee. And so we're seeing increasingly more and more of these programmable use cases that make the technology like a lot more like traditional finance, and therefore, you know, people with a lot of growth experience from a fintech standpoint are starting to come on board and see it as something that they could use themselves. I'm sure with the DeFi push that you guys are doing, Stellar, you're seeing something similar, right?
Yeah, I mean, specifically, like, it's about, like, I mean, SDF has for the better part of the past 10 years, yes, 10 years has been around for a while. But it's been the better part really, like, focusing on, like, supporting the ecosystem to build key infrastructure to really meet this need for, you know, right now. And so scalability, being low cost, high speed is really important, being compliant with, like, having issuers control specifically, and, you know, having composability, as you mentioned, kind of with smart contracts. And so this is kind of exemplified, you know, by some of the, you know, large kind of like asset issuers kind of coming onto Stellar recently. Most recently, PayPal issued or announced the issuance of PyUSD on Stellar, so that's really great to see. But then specifically, I think, you know, what's like left to build are these end-to-end use cases, and specifically now that Stellar has smart contracts, you know, how can you actually build something? Because obviously Ethereum has been like really advanced in having like several different DeFi use cases, but how can you build, you know, how can you transition DeFi to actually be available for the regular consumer that might not know anything about crypto, that might not have a high risk tolerance, that might not look at their, you know, DeFi pools every single minute, every single day, you know. And I think that we're looking at, last presentation was really good on like the AI side as well, because how can you automate some of those workflows? So we're seeing like interesting like solutions currently being built on Stellar that can kind of automate some of like the deployment of like the capital into liquidity pools and kind of optimize accordingly based on someone's risk. And, you know, we're seeing really interesting, easy to use user experiences when it comes to DeFi, and actually kind of labeling it as a, you know, traditional basically a savings account. And so like there's a company called Beans on Stellar. They're actually a Dutch team, so if you're from the Netherlands, I'm from the Netherlands, so I like support anyway. But they're really cool, and I've been working with them for years, and now they finally also integrated like aggregated DeFi pools, and actually like the user experience is super seamless. So you can kind of get USDC onto your wallet, and you can simply deploy it into, or like simply kind of like add this savings element and can add up to 6% savings. And 6%, I mean, for all of us being deep into crypto might not seem crazy because we lose like 6, 10, 20, 50, 100 maybe percent, or gain it, right, every single day. And so like we don't actually like notice that, or maybe we're tuned out. But for most people in the world, like actually earning 6, 10, 15% like as a savings account is really powerful, especially at a low risk, right? And I think like those type of more user-friendly kind of mechanisms that you can kind of easily like access savings and financial services, those are going to lead our next large kind of like mass adoption.
And now for the last segment of this conversation, going into like tactical advice, some playbooks that you see also from players in the space that adopted stablecoins. What is like your recommendation for builders in here that want to think about, okay, how should I integrate stablecoins into my offering? Is it just coming from being like global first in your distribution and like appealing to like a global customer, or what are like interesting ways to integrate stablecoins in there?
Right now, so far, the approach that we've taken to growing our products has been a bottoms-up approach, product-led. And because we were building a multi-sig solution, it was very much so something necessary in the ecosystem, something that a lot of people kind of rallied behind. So, of course, the obvious one is build something useful. But now we're transitioning to kind of a different model where we realize that most of the talent that is going to build the next leg for the adoption of crypto and stablecoins and DeFi comes from fintech. So all of a sudden, we're rewrapping all of our products into a fintech flavor from a language perspective, from a patterns perspective, and taking a very, very critical approach as to like, okay, I understand this makes sense in crypto, but it doesn't make any sense to a fintech builder, a fintech user. So it's like, how can we kind of reskin all of these different things, thinking very, very deeply about what our customer actually cares about. And so that's my advice ultimately. Like, do the thing that any kind of growth or marketing professional will tell you. It's like, know your customer actually, and this is something that very few people in crypto know. Who is their customer ultimately, how to reach them, and focus on them truly, and don't sort of be dogmatic about the infrastructure that you're building or what it enables or anything like that. Just try to actually solve their problem, and I'm pretty sure that will lead to the results that we're all of us are looking for.
So I would have 2 suggestions. It really depends what kind of product you have. If you do have a product where users have a significant amount of stablecoins as balances, you can monetize that float by integrating their white label stablecoin providers, where you can earn a certain portion of the yield that those stablecoins are generating in the back end by being invested in certain real world assets, usually T-bills that now Circle or Tether is earning to the greatest extent. If you're larger, I guess you can negotiate revenue share agreements like Coinbase has. I think we will see that increasingly. And if you want to grow into new segments, new geographies, one of our portfolio projects is Cello, and they have partnered with Opera, launching the MiniPay wallet. They have now 50 million active users across African countries. So I think that will be a tremendous growth market. Low volumes per user, but if you're deployed on EVM, you can deploy on Cello and create an Opera mini app, MiniPay app, and expand towards new segments. And with their local stablecoins, you can more easily tap into that segment.
Yeah, I guess I'll finalize in the last minute. I mean, kind of like adding on what you two mentioned, it's about like, obviously like, there's a lot of fancy new technology out there, but at the end of the day, you need to solve a real problem, right? And so I'm kind of giving a little plug here for our workshop later today. So we collaborated with the GIZ, kind of like a local example here, which is the development agency for the German government, really to pilot an on-chain payroll in northern Syria. And so we started late last year with about 30 employees of this hospital. Like payroll used to take months, had to go via the Turkish Post, and then actually we're able to kind of get it in minutes to seconds done. And so it saved like 25% of like, administration costs, great. But we also got like 100% like cash out rate and 100% satisfaction, which is actually unseen, which means like, hey, actually what we're piloted here is solving a real solution. And so fast forward 6 months, actually, like this scaled over 900 employees of that hospital, specifically deploying over $1 million in payroll. So, nearly $500,000 of like were saved and fees were saved, and this actually could like be used to set up a new hospital. So it's like if you're actually solving a real problem, and this comes from my ecosystem growth standpoint. So I'll also do grants if you need money. Talk to me. Want to build and seller. Solve for a real problem, and then like natural or organic like adoption will come, and then you can use your marketing techniques to actually exponentially grow that.
Thanks a lot. I think time is up. Thank you for listening, and yeah, see you.
Thank you.
Thanks a lot.
Yes, thank you so much. Anke, would you like to say one more time about the workshop, that it's happening now?
Oh, yes. So I think it's about 25 people. So if I guess I don't want to take people away from the from the stage, but like we're actually like working on specifically if you're interested to kind of innovatively think about new stablecoin solutions, or kind of want to get some hands-on work instead of like being talked to, then yeah, come join us in the workshop room. So we'll have someone actually that used to work at GIZ kind of explain more about that particular use case, and you'll get to kind of work with awesome teams to design kind of what impact could look like across stablecoins applications.
Thank you.